Alrighty, so I want to do a quick video. Bitcoin is moving again. It's moving on like every day. But anyway, so I wanted to go over this because I said once we got this 9, we got a high, we got the dip, that we could start to find a range. And it looks like we are. But we had the 1 hour right here, the 30 MA strategy on the 1 hour would have told you to enter. We would have waited a candle. Let me turn this all to 30 so we can see it. There's one line. All right, so we would have entered here. It would have told us to exit here. We would have re-entered, but ultimately we would have got out here. The returns would have been, very good. We would have waited a candle, exited right there, 5%. And the next entry would have been about here. We would have held until right here, 13%. But what I really want to talk about is we were getting, we got an entry this morning around 5 o'clock. We would have waited here. We would be up, about 7%. We bottomed here based on the RSI and TD sequential. So TD sequential, sometimes you can, the 6 can be the bottom. It doesn't necessarily have to be a 9. That's a big reversal candle, and we were oversold on the RSI, and we bounced since then. We kind of came back here, but I said last night that we could get this, we got the top, kind of develop this channel, and then we bounce and kind of get a secondary high. This could be that secondary high I'm talking about, and then we could come back down and kind of retest this area, the support area from the last TD9. We still are overbought on the RSI, but that sometimes whenever you have good momentum has very little weight because something can stay overbought or oversold for a little while. So we're on a, this is a 9. It's extending out. You would count 1, 2, 3, 4, 5. We're on a 5. The new day started at 6 o'clock, so this is the number 5 day. I can put it on the other T sequential that I have, but I mainly just trade the 9, so that's why I don't use this one. So there's the 5. There's a 4 count on the 13. That's something totally different. It's still TD sequential, but it's a different count. It's a different type of setup. So yeah, so where do I think we can break out again? If we get a daily close above this prior high, and this is a 5, we can go down for another, 4 days, 6, 7, 8, 9. January 10th could be another top. That would be a TD9. We did retest this area, but like I said, I would rather red numbers retesting the green number. Maybe, eventually we will do that. Maybe our next rally will get the 25% drop and it'll revisit this area. This area is still not out of the question. These areas, 24, 23, are technically not out of the question. They're larger than the drops that I said we could have in this cycle, the 15 to 20%, 25% drops. This would be around a 30% drop. That's what we saw the last bull cycles. We'll see how that goes. But we could get a higher high here on a daily close above, maybe not even a daily, a 4-hour close above, this 9, right? So a green number of a prior green number above a 9, that's bullish. I mean, it would have to do it now or, potentially 6, 7, between now and sometime in the morning, tomorrow morning, we could get a big push. Let's see what the CMF is doing. CMF is not showing, that would happen, right? We're getting what they call bullish divergence. Price is going higher. Actually, you would do it this way. You would kind of draw it here. Price is going higher when your indicator is decreasing, so that's a divergence. Let me see. Let me show these divergences. I've never shown these divergences. So bullish, so you can kind of see what I'm talking about. I keep on saying it, but I haven't really shown it. And there's a little cheat sheet. Here we go. So there you go. This is perfect. So this is what I'm talking about. So no, there's actually a better one than this. There's one that kind of shows like it can be a continuation. Here, this one's right here. So like these are continuations. This is a reversal. Weak. Weak. You know, you would put a little bit less weight on a trend like this, medium weight on this one, and then strong indication of a reversal. So where are we at? Let's see what we can draw on this indicator. We can draw this right here, right? So that's a trending down indicator, and this is a trending up price. So let's compare that. I believe that's hidden bullish divergence. So yep, hidden bullish divergence right there. So that would be an indication of a continuation of the trend, right? That's what we're getting here. But we're also getting a higher price with a lower indicator, right? So this is kind of like a this is like a counter. This is almost like giving you mixed signals. Sometimes this stuff will give you mixed signals. So we have this, which is bearish divergence, which is also a strong indicator. Continuation. This is saying we have a continuation here. So if you're drawing bullish divergences, it's always from the bottom of the charts. If you're drawing bearish divergences, it's always on the top of the charts. Right. So this is top. That's bearish divergence. But again, we're getting something else that's telling us we're getting price climb with indicator going lower, which is this one, continuation of the trend. So that's kind of a mixed signal. Maybe, you know, that do they cancel each other out? Not necessarily. Or I would say no, they don't cancel each other out. This is leaning somewhere, and I think this is leaning more towards a double top. Or not really a double top. It's not right there. I mean, it's close, but I think it's leaning more towards a high, retest, and then your secondary top, and then we go lower. But we go lower based really just on what we're developing is a trading channel. Let me get rid of this, and let me draw my channel, because right now I'm just notating. It's just notated with a price drop. What is this? Let me get this out the way. I'll draw it on the 4 hour. Oh. So here's my trading channel. This is what I think, and I went over channels yesterday, right? So this is what I think is happening right here. I'm drawing a 9 to 9. I think we're getting this. I think we're getting a trading channel. So what's my target? If it breaks down or it breaks up? On a breakout, target is 40,000. On a breakdown, target is 23. Maybe that's when we would revisit this. I don't think a breakdown is likely. I think we just consolidate here. Trade. This is drawn out to the 13th of January. But we have something else to go off of, right? We have our 30 MA strategy that's done very well. We did have a 9 pullback. We had a 9, 1 to 4 candle correction, and then we can go higher. So we're in the trade as of here. We are up 7%, about 7%, 7.5%, or 7. Let's say 7, right? You don't always get in exactly, right? Somewhere in here, you're approximately up 7%. We would exit once we get a candle close below this. If you're feeling a little anxious or that you think this is going to break down this time, you wouldn't wait for that second candle. You can go ahead and just exit once we close below it, because that's the way the strategy is supposed to be traded. But I kind of wait one candle. It's not going to really affect your outcome much as far as the return goes. So yeah, so that's where we're at. But I do want to go over a trade that I made yesterday. Here we go, Fubo. So good example of a quick trade. The window is extremely small. Well, I say it was extremely small. Let's look at it, and I'll show you how I entered this trade and why I took it. So, and it's also off of this divergence thing. So we had lower prices, and we had, let me turn on the other indicator because it continues the count, and I just need to spend time to code this in and make it do a continuation of a count, or just pay for. So the guy I learned this from, his name's Tone Vase. He's kind of changed it a little bit. He's adapted it into an indicator that he's coining the MRI indicator, but it's the basis is the TD sequential. So he actually doesn't really show the nines anymore. It's just a his MRI is the MRI top or bottom, and it's the MRI indication is the 9 on the TD. So, but getting away from what I wanted to show here, we have a 9 here. We had another 9 here. That's double nines. There's a strong probability of going back to the previous 9. We're having price kind of go higher, or price going, let me zoom into this. It might have been better on the 4-hour, but I knew I saw it on the 9. Yeah, I think it was better on the 4-hour. Yeah, maybe not so much, but really, what you really want to pay attention to, and kind of what I took the trade on. Well, let's pull up the CMF. Maybe there was some CMF. Yeah, there we go. That's what it was. So examining both. So examining the RSI and the CMF together. Right here, we have prices going lower with buy-in trending up. Right? So that's our bullish divergence. I mean, this is coming all the way here, right? Right? Let's go back to our right? So we have price going lower and our indicator, our oscillator, going higher. And this is indication of buyers, right? There's more buyers than there are sellers. RSI is bottomed out. It's below 30. Things do not like to spend time oversold. Okay, maybe there wasn't a strong divergence here like there was on the CMF, but I'm using TD. I'm using a couple things here. I'm using my TD sequential because I have another 9 count. 1, 2, 3, 4, 5, 6, 7, 8, 9 right here. That's a reversal candle, right? Like whenever I went over candles, that's a reversal candle. Our RSI is oversold, and we're getting bullish divergence on the CMF. That says if this thing's going to reverse, it's going to reverse soon. Where am I wrong, right? Where does this thing continue to go down? I'm wrong. I would say I would enter the trade on this 9, because this is a 9. If you count here, and I believe that's where I entered the trade, right here at this 9. I am wrong whenever price closes below this 9. So I would have entered, my stop would have been 23.21, right? Maybe we can go to the 4-hour. I could have used this 9. I think that, and I believe that's what I did. Yeah. Let me look, because I actually wrote this down. So, let's see, I wrote it down because I wanted to go over it. Yeah, 22.87 would have been the low. Would have been where you're wrong. Right there. So that's where I'm wrong. I used the 4-hour. So I used a couple of things here. Right? And here's the thing about it. Whenever I looked at this, I got a tip from one of my buddies. Whenever I looked at this, I said, this decision was made quickly. I looked at the charts and I had a decision on if I was going to buy in less than probably 2 or 3 minutes. Right? So let me look. I have all this written down. So I made this decision in less than 5 minutes. Came in. This might be something good to buy. I looked at this. We overshot the 9 here on the 4 hour. Our 1 hour had printed another 9 with all this, uptrend in CMF. Our oversold RSI. Where's my target? Where am I wrong? Okay, I'm going to enter it here. Where am I wrong? Because if you have a target, you also need to know when you're wrong. I'm wrong whenever price goes and closes below this 29 or 22.87. Right? So that's how I do my risk management. Okay, so I entered. Let me put this here. So risk management is one of the hardest things to learn or to teach, really. So long position. Let's say I entered on the high, right? Maybe I didn't get it perfect. Entered here. My stop is right there. And my target is on the 4 hour. Now I entered it on the hour. You could say the low here was 28.78, so say 28, and then here it's 27, so like my target's $27 to $28. Okay, there we go. So I'm going to put it on the 4 hour. I'm going to enter and exit on my 4 hour. So my ratio, so your P&L, in your P&L is one indicator, but then you have this risk reward indicator, and that's what you really want to pay attention to. So your risk reward indicator, most traders like to enter whenever they have a risk reward of about 3. So anything above 3 is considered good risk reward. So right now, my target would give me 12%. My potential loss would be 5%. So what I'm doing here is I'm saying if I have $100, right? I'm using 100 for simple. So 5% loss. So 100. I can't take anything more than a 2% loss. So 2%. 2% of 100 is $2. So if I have $2, my potential loss is 5%. So what can I risk? My potential drop is 5%. So how much money can I risk to where I would exit once this drops 5%? You take what 2% of your total account is, you divide that by the percentage of the drop. So I would do 0.565, and that's, no, that can't be right. I'm sorry. You would have to inverse that. So it's 0.0565. That's why I messed it up. 2 divided by 0.0565, and that gives me $35. So I would risk $35, and then if I get a 5% drop, that would give me my 2% of my total account of as far as drawdown, because when you don't want to risk any more than 1 to 2% of your account. So that's the example, right? I have a $100 account. My potential drop is 5%. 2% of 100 is 2. Divide that by your potential drop, 0.565, $35. And then your return would be 12%. So times 12%, I would make $4 on that. But that's how you would do that risk management, right? 1 to 2% of your account. I could only risk $35. I could only open a trade with $35, where if my drop was 5%, I would only lose 2% of my account. So there's a risk management and how to scale, how to position your trades, kind of, real rough not rough. That is exactly the way you would do it. It's just good. That's an example. So I entered there. My target's here. I get out at my target. Yeah, it can run up a little bit, but the overall trend, right? The bigger trend. I bring in my 3 moving averages is down. This initial one is starting to move down, so that trend's down. Look at that. Went above a 9. We got a big reversal candle. And where's price going? You know, you could see this reversal candle and say you want to enter a short. Maybe you want to buy some put options. You buy a put option. What's your target for that put option? Say $28. What's your time frame? 1 to 2 weeks. So maybe you buy some put options that are a month out to give you 2 weeks of play, or maybe 3 months out to give you a little bit of leeway. And then boom, you get it. You get your target. You sell out your put options. You would have made a bunch of money. But anyway, so back to this trade. Whenever you set targets, you exit at those targets. You don't play around and say, hey, I'm gonna wait around and see if it makes more money. You set your targets. You exit at those targets. If price continues up, if I would have went here, I got my green number, back testing my 9. I got it on my hourly as well. And that's it. 9, 1 to 4 candle correction. This went 5. Now it's going back down. The trend is probably back down. The overall trend is down. But there's your trade. Small window. You would have made 18 to 20%, depending on what your when you exited. And then that's it. You could cascade stop losses all the way up. So if you would have entered at, say, let's see, here, 24 something, say 24.45. I believe that's where I got in at. I reached my initial target. The support, once, the resistance is at the 9 and at this 1, because there's a 1 here. You could say as soon as the market opens, I have the 1, I'm going to set my stop at 27.77. And you know what I did? That's exactly what I did. Market opened, I set my stop at 27.77. I got out within the first hour of trading. It went higher, but that was it. If it went, and then I'm going to look at this candle, I'm going to go my upper. So if it goes 30, I'm going to raise it to the bottom of this 9, 28.78. And then it eventually dipped below that. But yeah, that's it. That's a trade. That was a quick trade. You would have made 15 to 20% if you're not perfect, depending on where you exited. You hit your targets, you're out. Move on to the next one. Overall trend is down. This type of formation, once you start looking at charts, this is pretty common. This formations, you'll find this similar formations, and especially this just IPO'd in October. Big run up, big spike, drop, find support at previous resistance. Maybe we trend up a little bit eventually, weekly. Oh no, hold up. This didn't just IPO. Why did the 4 hour only stopped me? I don't know. Maybe they only had limited data on the 4 hour, but this is something that's been trading for a while and it's been in this channel. But anyway, it broke out. Overall trend is down. I'm out of it. We have a big reversal candle. I'm out of it. So yeah, that's a trade right there. Let's go back to Bitcoin real quick before I close out. Still sitting there. We'll see. We exit if we entered here. Once we have an hourly close below this, but we're still in the 9, 1 to 4 candle correction. We can go 2 more hours, and then we go higher. We'll see what happens in another 2 to 3 hours. So, thanks for watching.